Good morning. Welcome to the live stream. Welcome back. Welcome back. Happy Monday, all of you guys. I hope that you can hear me. Let's see. If you can hear me and give me a thumbs up, that would be awesome. Welcome to the live stream. Let's see if this works here. Can you guys hear me right now? And see my screen, etc. A little bit of feedback, maybe like a thumbs up or something. All right, awesome, great, cool. If somebody's having issues, okay, let's see. All right, cool. Let's start this live stream. Okay, well, welcome in to our Monday live stream. This is going to be done 3 times a week, just in an interest to kind of provide some color on how we do breakdowns. I hope you guys enjoy this as much as I enjoy doing it. I do my pre-market breakdowns anyway, so this is definitely going to be something that will help you out, kind of show you how I think about stuff, break the market down right before it opens, and hopefully you can gain something out of this. So let's get started. Cool. So we continue on the story from last week with the SPY and S&P 500 making some interesting moves. I did mention that we would see a uptrend form, possibly hitting the 23.6 and then the 38.2. And then I said there was a possibility for us to go to the 50, right? And we have achieved both target 1 and both target 2 right now, which are these 2 levels. I'm going to start off by doing the analysis on the US macro conditions first, and then move on to other things that I have lined up for you guys. So today's concentration is going to be on the US macro conditions, okay? As we move forward in this coronavirus-driven narrative that is gripping the markets, we have seen kind of a relief rally, right? And this relief rally is something that happens when a huge drop forms. And this drop was a really big one, almost 30, I think it was 38%. And so the 38% drop is warranted to follow with a relief rally, which makes sense because nothing moves in a straight line. There's always a up, down, up, down, up, down, and then followed by, if you see a reversal, then there's always going to be a higher high after that. So the good news is when we rallied up on this day, we came back down on the next day, right? Which is a good sign that we're going to continue the downtrend. And it kind of reinforces the idea that this is indeed a dead cat bounce. What is a dead cat bounce? It's exactly what it sounds like a bounce on the bottom, a relief rally, followed by another downside. So today what we're going to be looking for is for SPY to either close not higher than where it is and not to close above this level here. If we can hold this level over here and even possibly hit to break below the 23.6, we will be seeing a technical confirmation that we will see further downside. Now, interesting things that to take note of that I was looking at earlier is on the 4-hourly, we're still in a downtrend, right? This wave up is not really considered a reversal of a trend. In fact, it's just kind of sitting above the 50 moving average and deciding what it wants to do. To me, this pattern looks more like a market indecision. We are consolidating sideways, right? Kind of like going like that, like that. And so the market is not decided on where it wants to go right now. I think that's what the issue is. Let's just see if you guys are still here. All right, cool. Good morning. Yes, thank you guys for coming into the live stream. Appreciate you guys being here. By the way, just to mention once again, if you're here from Option Swing, welcome. If you are not here from Option Swing and this is your first time attending this live stream, I would really appreciate it if you could, hit that like button, subscribe, so you get more notifications when these things happen. It really helps us out a lot. If you want a sneak peek into how Option Swing looks like, this is what our Discord channel looks like this morning. We have various traders that call out stuff, and all different channels that are for different things. We also have an entire series that is dedicated to education, which I spearhead as one of the mods on the channel. So yeah, and as I was showing you last week, we have a cool stock bot that gives us important information. Three kinds of options flow, one that tracks normal flow, ones that's a little higher, and then we have the golden flow, which is for $1 million and up stuff. So we have a lot of interesting resources on this channel, and I think that it's well worth the money to actually be on this channel itself, in my personal opinion. Not to mention night chat, which is just the best night chat ever. I think people can attest to that. We have some of the most engaging members who teach each other, and if you are a beginner trader, this is the perfect platform for you to learn. So head over to optionswing.com if you haven't already to check it out. If you don't, if you're not comfortable with the commitment, I understand. That was me at some point of time as well, and I was like, wait a minute, this is quite a big commitment per month, but many people make that money back within a day. So it's just the way you look at it. Do you really want to invest in yourself or not? Okay, moving on. So with SPY right now, the story on the 15-minute looks like we are trying to break through higher highs. I see a lot of consolidation happening, and then we're breaking to kind of an upward pattern. So we will see if we can continue to hold this pattern to the upside. However, there's going to be significant resistance up here at around 2,600. So that is something to watch today. SPY at 260 will be a key level. If we can break that level and continue hitting up, then I would say that we have to severely reevaluate our positions in the puts and start to look at upside positions. In fact, 264 or 265 would be more probable for us to get out of puts and start looking at other positions. Now, the other thing that I wanted to talk about was the possibility of this continuing to be a short squeeze. And I highly, highly think that that is still very possible. The reason being because look at the put to call ratio today on the 30th of March. We have once again, a very, very high put to call ratio, which means traders are betting a higher amount on puts versus calls. Now, if you see tomorrow, that drops down and it flips to the call side, which is interesting. So there are people who are betting for people to get squeezed today and then a relief rally tomorrow, which may happen in a short cover if that situation permits. The rest of the week seems to be bearish and onward. In fact, it just continues a bearish trend. In fact, it peaks out on May 1st, where option traders, even though there's a little volume there, it's showing that day people are the most bearish. 17th April is the one to watch, where we have a high volume of open interest for puts versus calls. So the main thing here that I wanted to mention that we should be really careful of is a short squeeze. And if you are indeed holding long, range options where you're hitting somewhere into May, stuff like that, somewhere here. I would watch for the market to continue this consolidation. And if it does consolidate this way, then we are going to have to reevaluate our positions. And hence, this is the reason why this live stream is so helpful. If you are following along and you keep attending it every Monday, Wednesday, Friday, it's going to be like a beautiful story, and we'll be all in this together, and I'll be able to guide you guys. So continuing on with the US macro conditions, which are really important right now, we had a stimulus bill of $2 trillion that was passed last week. And in my honest opinion, I don't think that $2 trillion is going to do much. I think that $2 trillion is just a drop in the water. We'll see much more stimulus come out of the Feds and out of the Congress. Reason being because think about majority of us, we haven't really felt the ripples of the economic crisis yet. We probably haven't come about, it hasn't even been a month since we paid our bills. And so when your income stops and your income goes to zero, right, it's not like, you don't like immediately need the money, right? You're like, okay, so you have a cycle of funds that you're circulating month to month, and then you have bills to pay, blah blah blah. But then since this period is 1 month, we haven't got through that cycle yet. So what's going to happen now when the money is cut, right? We don't have no money, and then the bills come up. Congress has kind of enacted through the bill that, okay, you know what, you don't have to pay mortgages, you don't have to pay, whatever that you have. But the issue now is that with this is, after they said that they're going to put a hold on mortgages for 3 months, I believe, right? And after 3 months, you're still going to be liable for your mortgage. So how does that make sense? Because at the end of 3 months, you're going to still pay the full mortgage up. This is going to cause a lot of credit risk. And we're seeing some of that already flow into the system. There was an article that I was reading that I was not able to pull up right now, but essentially what it said was that majority of the funds, mortgage-backed security funds that were trading mortgages, risky mortgages and asset-backed mortgages, they're actually starting to default on their loans. The reason why is because with this Fed pumping liquidity into the system through treasuries, most of those mortgage-backed securities are backed by treasuries. And hence, with the Fed pumping money into the system while taking those, when you put money into the system and you take the treasuries out, what happens is that those firms that have used those risky assets to purchase those securities, they now have margin calls. And so the margin calls are called on the risky securities that they have invested in. And the reason why they have margin calls is because they use, oh my goodness, I'm just murdering this. They have margin calls because they use those mortgage-backed securities as a hedge to the upside, so that when the Fed tries to put a rate in, they can capitalize on the lack of interest. So right now you have a couple of things happening, and I can tell you that this is just the beginning. I don't think that the 2 trillion is going to be enough at all. On other news, here's a great headline to look at, right? China returns to work as US extends shutdown, right? So as I mentioned about 2 weeks ago, that I am going to be taking some small positions in Chinese stocks. So just to conclude our US macro situation, I still think that we have downside, by the way. And I still see us going further down if we don't break this key level here, okay? So we will continue to see a downside as long as we don't break this key level. If we break this key level, we're going up to the 50 Fibonacci retracement and then possibly falling further down. So that's the situation with the US macro condition. However, with the Chinese macro condition, the central bank announced that they are about to stimulate the economy with additional rates, right? A rate cut and a reverse repo of about some $60 billion or so. So these are all important things that you got to take note of. I personally like the Chinese stock situation right now. And let me show you a couple of stocks that I really like that I've been following for a long time. IQ is one of them. This is like the combination of Disney meets Netflix meets some gaming platform together. And this stock has a pattern of recovering to the highs and then dropping to lows. And I really like this as a swing play, like a long swing. Maybe like a 5-month swing or a 4-month swing. You could buy in right here and hold maybe an option for 6 months out for IQ, which is a great company. And they recently posted earnings with diminishing losses, which is what we have been waiting for as an investor for a long time in this stock. I have shares in this company, I must disclose that. And I'm just advising you that this is a great opportunity because you can buy in at a discount here. And I personally think that this is a great stock to buy. There are many reasons why, and then I'm willing to go through this in a separate stream altogether. Maybe one day I'll commit to doing a Chinese stock stream. The next one that I think is really good as well is Tencent. TCEHY, that's the ticker symbol. Tencent Holdings. Now, Tencent Holdings has actually not been affected much by the virus. If you look at it, yeah, it kind of moved from 53, went down to 40, but if you looked at it, it didn't really break below its yearly low, and it's actually recovered really quickly. Tencent does a lot of different functions within the Chinese economy, and is one of the main operating apps that are within the country. Now, obviously, you wouldn't buy it when it's so high like this. You would wait for a retracement before getting into Tencent. But I like this stock for a long-term hold. If you're one of those people who are asking me, what is the stock that I can buy for a long-term hold? This is the one. The next one is Baba. And Baba has, dipped quite a fair amount during this crisis, but it's, showing signs of a kind of a recovery, which is nice. And I long-term like this stock in terms of, a play for the upside. The risk to reward ratio is awesome. And if you were to do a swing for about maybe half a year, I think this would be a great one. So those are some, interesting ones that you can look for. In other news, we had some pre-market movers today that I wanted to go through. Abbott Labs with the announcement of the machine that they created that tests coronavirus within 5 minutes if it's positive and 10 minutes if it's negative. And then we have a Carnival Corp that's continuing to get murdered, as well as RCL, the two shipping companies. Keep an eye on that. I also saw APT moving quite a bit, so you might want to keep track of APT today as well. These will be all stocks to watch. And then mortgage companies getting murdered, as I had mentioned earlier, due to margin calls. So the Fed, by actually helping them, has caused issues here. Now, moving news today that you will need to take note of is the 3-month and 6-month auction bill here. There's going to be treasury auctions for these, and even though they're not that important, they're going to actually be able to tell you what the risk appetite of the market is. And if people start continue crowding into these bills, then we're going to know that we're still not risk off, and we want risk on before we continue to buy up to the upside. We want to continue to stay risk off until the market tells us so. So don't get tricked into this. I highly recommend watching things closely. The VIX continues its hovering above this level. We haven't broken below 58, which is a good sign. We did go weirdly to 37 last week, which was a weird day, but as long as WIX stays in this level, we may continually see fear back in the system. And then we have bonds, which I spoke about extensively, which I said was a really good play last week, and it has rallied further from where it was. I see bonds going up to 180, back up to 180 all-time highs as the QE program continues. I think that getting long in TLT, which is the 20-plus year Treasury bond ETF, is a smart play. I have mentioned this for almost 2 weeks straight, so I hope that you guys get the hint here. I think that bonds are a good play. If you want to wait for a better entry, you might get one if the market sells off. So keep an eye on TLT and use your better judgment to enter into a long position. Do not take a short expiry. It's not going to work. We want to play this on the long side. Great. So just covering the bases and all of those things. Oh, Ulta Beauty closes all stores temporarily. This is bad for Ulta. Let's go into the live stream questions. Cool. So does anybody have any questions for me today? Let's kind of go through these really quickly and see if we can get a couple of questions in here. By the way, if you're attending my stream, thank you so much for coming by today. I appreciate you guys being here. Hitting this like button will tell me that you like the stream and have enjoyed it. Also, if you leave a comment with the emoji or something nice that you want to see for the next stream, that would be really helpful. I appreciate your time being here, and remember to check out my Instagram, Everyday Growth Advisor, and also Option Swing, which is a partner of what we do over here. Cool. So maybe I'll give you guys like a minute, see if you guys have any questions for me, and get a jiggy with it. I was also looking at, let's see, there was something about oil continuing its downtrend, which was interesting. So let's see here. New York considering a cigarette ban sale. Okay. see, great things, this, that. No one with any questions today? Come on, come on. Currently holding SPY puts 240, 43 with covered 223 puts. Yeah, I think you should be, you should be okay. Hopefully the market doesn't decide to go completely apeshit and try to fuck us over, but I think we should be okay with those. Will you be concerned if tomorrow isn't red with open interest in SPY showing more calls with put versus puts? Well, yes and no. I would only be concerned if we open green, but we are above this level, above the 265 level, which I was saying earlier. The reason being because this would signify that we're gonna go touch the 50 Fibonacci, and I don't want to be holding my puts all the way through that just in case of any monkey business. But as I said, nothing goes up like a straight line, right? So you might see this and then this and then this, or you might see this and then this and then this and then that. It could be any way right now. What I do trust is the fact that we don't have any developments on the macro front to support a rally up, and that's the reason why I stay, with my analysis. Wouldn't the shutdown in the US extending for more than 2 weeks cause a negative reaction? You are right. Actually, it should. But markets are irrational and they want to bet on what is more of a risk to reward ratio. Right now, markets see that there are more people betting on puts, and hence they take the opposite direction. Institutional traders do that the most. Market makers do that the most because they know exactly where you're betting, and they don't want to play into your bet. They would rather play the opposite side so that they can squeeze you out of the positions, causing a squeeze. If none of you know how a short squeeze works, let's say you have a short position, right? And you're expecting this whatever security to go down, right? Now, if the market maker knows that we have positions all on this level here, what it's going to do, it's going to start buying instead of selling into your positions. And what happens is that since you have your positions here, you get squeezed on the upside, which is this margin here. Now, some players like you and me might be able to stomach this, right? But what happens ultimately is that majority of these players here, they sell their positions out of fear, or they simply just don't have enough capital, right? And so what happens is that instead of the stock price just going up when these guys sell, it ends up pushing the stock price much higher. And that's what happens, because the opposite of a short is a buy. And so when you close your shorts, you have to buy in order to close that position, which causes the security to spike up. Now, when the security spikes up, then the remaining players like you and me who, are still holding our positions here, we're like, well, what the hell? Maybe this is just a reversal in trend, right? Wrong. It's not a reversal in trend. It's just because these fools sold and the stocks moved higher. And so in that position, you are forced to squeeze. And so then even though you have a bunch of money and sitting in this and you don't really care about the margin call, ultimately you are squeezed out of this position. And then you sell. And then guess what happens? They take short, the institutions take short positions right on the top. And they ride that wave down after you have sold. So it's a very dangerous game to play, but that's the idea. Okay. Think I should get rid of or hold till Friday. I think that you can hold till Friday. I don't see us like moving crazy. I mean, we could move crazy, but I don't see us, honestly, I don't see us breaking that 265. But I may be completely wrong, honestly. I have been wrong in the past, but yeah. Disney now closed until further notice. I'm expecting very bearish earnings and a gap down today and slow beat for the next few days. Yeah, Disney might be a good play. However, let's look at it together. That's the beauty of these live streams. You get to ask questions and get them answered, and we learn as a group, right? So Disney has seen a crazy sell-off and then kind of a bounce together with the market, and then you have this coming down again. I think that if Disney remains closed for a long time, then yes, this would be a good play to short Disney again down. However, you might want to choose a risk-defined move here. So choose a mid expiry, not a long or not a short. Go like maybe a month out and play some puts, maybe even a month and a half, honestly. Just look for the Greeks to be more beneficial rather than, you know, killing you with theta, because that's very possible. Cool. Guess we answered most of those questions. Any more questions that you guys have? I'm sure you guys have some more questions. All right. Well, if you guys don't have any more questions, I will wish you guys the best of luck for the day to come. SPY seems to be on a kind of a upward trend right now, rallying as we speak. So we'll see how this moves. Keep an eye on the key levels that I spoke about. 265, 260, that level is a key level for SPY right now. If we break above this level, then yeah, we're going to see further upside. If we stay below and, you know, we can come to break below this 23.6, we will be heading down. However, if we continue to consolidate here and this happens for more than 2 days or 3 days, then I'm going to sell my puts, because market indecision means that a big move is coming. So we'll see how this moves and we'll reevaluate our positions on Wednesday. Thank you for, oh, wait a minute, let's see. How do you know when to plot a Fibonacci? For example, you added one down at the bottom to know our 38.2 was at the 265 level. So essentially for Fibonacci's, you want to do it from a swing high to a swing low. And so for this case, I pick this level to be this recent swing high, which is our market all-time high. And then the swing low is the bottom of the candle that we have the most recent low at, showing us the entire range at which we are expecting the retracement. So if you draw it from the high to the low, the Fibonacci will show you that the 38.2 is exactly at the 265 level here, if that makes sense. Let's see. Would you hold on to SPY 221 puts 4-3? Ooh, this is a bit risky. I would reevaluate your position here. Either roll it over to May, or buy a strike that's higher. And I wouldn't recommend buying a strike that's higher. I would just roll it out to a further out expiry. Timeline for TLT. TLT timeline is like, I would say 4 months to 5 months. No problem for the great live stream. Thank you for tuning in. Once again, if you haven't subscribed, please hit that subscribe button, like it, you know, so that you get notifications when this thing goes live on Mondays, Wednesdays, and Fridays. What's RNG, new NEE? Man, I was just talking to Jim about this, and you know, we definitely should have seen RNG. That was a great play. We kind of missed the ball on this one. But it's okay, you know, you can't win all of them. NEE still remains a good play though. And I see NEE recovering. I have options for June. I have some 280 calls for June. I don't expect us to hit 280, but the more it goes up, the better it gets. So my NEE and Gillette position, GILD for Gillette Sciences, are hedge positions to the upside. The rest I'm holding are all puts. So just if you guys want to know what my positions are. I see a lot of people saying roll over puts. How do you roll over put? Okay, so if you're using TOS, you can right click the option and hit roll over, and essentially it gives you the ability to sell your current option and buy a new one that's further out. Rolling over is basically closing your existing position or using the collateral to buy a new position further out. Had some Jan XOP calls and it just had a reverse split. How does that affect? It doesn't affect your options. If there is a split, the premiums will be adjusted automatically. Okay, great. Thank you. You're welcome. Let's see. Do you think UPP will go up in the next month and a half? What is UPP? Isn't that the dollar index? Let's see. UPP. Huh. Did you mean some other ticker? I can't find UPP. UPP. Did you mean some other ticker? Because I don't see UPP on my list here. In your opinion, has the market upside been liquidity pumping or changes in investor optimism? Well, so no, definitely not liquidity pumping, and definitely not investor optimism neither. This has been basically a pure squeeze for people who are holding short positions, and it makes sense. Like it happens all the time, man. Like you always see these huge like rallies with SPY and then a continued sell-off like right after. We basically come back down to where we were, and these squeezes, they force players who are short to get out of the market, like how I explained earlier, and then it forces the downtrend again. So if you look at it, we are actually in a downtrend, but this is just making a high right now, right? So these rallies, they scare investors. They scare investors into taking their long positions out, or sorry, their short positions out. And during those times, the investor is extremely scared. They would just get out of the position in a bid and in an effort to get additional cash so they can fire again. Oh yeah, UUP. Yeah, I was right. That is the dollar index. Okay, so UUP is this is an interesting one. I do see upside for UUP, and I actually had said that I was interested in shorting UUP the last time on my previous stream. However, I was anticipating UUP to go up further. But you're gonna have to watch this one closely because it's a bit more complicated with the dollar. Since the dollar is the main currency of the world, it's 60% of the world's currency. We can't assume that it's always going to play out in the way that we want. There are many things affecting the dollar, and right now the dollar is definitely super overvalued because of the fact that people have rushed towards the dollar. Like if you look at exchanges, except for ruble, which is the one caveat, the rest of the world is heavily engaged with buying the dollar prior to this. So as we see, risk flow back into the system, you will see UUP continue to fall. But looking at this on the monthly, you can see the dollar has been extremely volatile this month. So you got to be careful when you're dealing with this one. I would say calls if it reaches $25 or so, somewhere around here, calls. But if not, I wouldn't play this to the downside just yet, because you may see a spike. It works hand in hand with this, right? If the market continues to sell off, then the dollar is going to spike again. This will go up. So it's going to be that way. Cool. Well, once again, thank you guys for streaming in. If you haven't checked out Option Swing, check it out, man. It's a great community to be a part of. We have a bunch of people already talking, we even have a technical analysis channel where people post their charts, whole news section, and not to forget a dank meme chat, man, where we post some awesome memes. So if there's anything else that I can answer, thank you for streaming in. See you guys on Wednesday. Maybe some more content. Try to get some more information on things that are going on. Till then, I hope you guys have a great trading day, and thanks for tuning in. Have a great one. Bye.